welcome to Forex Success. So in 2 minutes I'm gonna show you how you can calculate your pips. Calculate your risk slash reward. Okay, let's take for instance you're using this strategy to trade volatility 10 index, and okay, let me zoom this out. So, and you saw this intersection, that is this moving average crossing below the chart, so you decide to take a buy. So now you place your buy right here, and we're going to denote that with a red line, a horizontal line. Guys, I want to make this video very fast. So that's your entry, that red line right there. And this other red line, let's say you put your stop loss right here, that in case it breaks through back to the downside. So take for instance your stop loss is here, and now you want to know, because you need to like follow the risk management plan so you won't have to risk much. Maybe you want to risk just 2% of your account. So now you need to know how much is going to cost you from here to here, so that you know the appropriate lot size to use. Okay, so all you need to do is just to calculate. This is your entry is 6461, and your exit point is 6455. So when you subtract the 6461 from the 6455, that's just about 6 points, right? Yeah, that's 6 points. So then you move to your browser and search for pips calculator for deriv. You search for it. So this is pips calculator for deriv. Remember, we're trading volatility 10 index. So now you come here. This is the pip value after calculation, so you put it on volatility 10 index. This is how, remember, we counted 5 points there, right? That's from 6451 to 6455, so it's just 5 point difference. Yeah, so the volume, let's say you want to use a lot size 0.5 and the point value is 5, so you click on calculate. So this brings you to $25. Definitely means if you are using a 5 lot size, you're gonna lose $25. But if you are using a $0.5 lot size, 0.5 lot size for that trade, you're gonna be risking $2.5. If you're using 1 lot size, the volume it's the lot size, then the point value is what we just counted. That's the range, the difference between your entry and your stop loss level. So if you're using a 1 lot size, it's $5. So you see, that definitely means that if you took this trade and your stop loss is here, and you use a single, that's a 1 whole lot size, means you are risking a $5. And if you kept on using your trailing stop loss, just like I told you, if you haven't watched that video, just search on the check. I think that's the 2 video I posted, I uploaded before this one. Just check it and learn how to manage trade. Yeah, so then you should be right now while your stop loss, you keep on moving your stop loss. So after this higher low movement, after this higher low and higher high movement, your stop loss should be right here right now. Then when the market moves up again, make another higher low move, you move your stop loss accordingly, and again move it to the upside till the trade finally maybe hit your stop loss. Advice, I know this is volatility 10 index, it's just going to move up for some time, then it's going to continue moving to the downside. Like I did this analysis before and I shared it with you guys. Volatility 10 index as well as step index, they are both coming down. You can see on a long-term frame. So it's actually creating an opportunity for a sell opportunity right now, in case those of you that haven't actually entered this trade for the long-term move. I'm currently holding the trade, so I'm actually not worried about whatever it's for me right now, because I'm on a long term. So if I just extend this trend line, if I just extend this trend line, I'll be actually expecting this market to start coming down from this level after hitting this resistant level right there. But that's not the reason for this video. This video is just to show you how you can calculate the pips. So let's just do this one more time on step index. Yeah, so on step index, guys, let's assume we put it on 5-minute time frame. Okay, yeah, I need a clear way to show you this video. So let's assume you took a sell right here, you took a buy right here, considering the fact that the red moving average crossed below the the chart, and then you set your stop loss right below there, considering every other support and resistance level. This ranging that we had right here, and you placed your stop loss right here. So the difference between your entry and your stop loss, that is the point you just need to calculate. So let's say you took in right here, which is 8582, and then your stop loss was at 8577. That definitely means that you were risking a 5 point on step index. So if you're using the lowest pips, the lowest lot size on step index, it definitely means you're using 0.1 on step index. Let's say 0.1 lot size on step index, and the point was actually 5. So you put it on step index and calculate. This is it. It definitely means you are risking $10. So this is how you can use this strategy perfectly, understanding your lot sizes. This is how you'll be able to know what lot size you're going to use, and you'll be able to still properly manage your risk so that you won't get to blow your account. So let's say you risked $10 for this trade, and the trade moved to the upside. Guys, this is a money making tool, and the trade moved to the upside. You have a stop loss right there, right? The trade moved to the upside. After forming this lower high move, your stop loss is now here. You know how much you've secured, guys? You've already made times 3 of what you risked. Once your stop loss is here, it means you have already secured up to like $30, because from this entry right here, which is 8581 to 85, okay, it should be like double of what you were risking, and then moved again. After these moves again, guys, your stop loss, once you see this long bullish move, your stop loss should be extended to this point. And then what happened right here, after this, guys, your stop loss should still remain here, because you've not seen another move to the upside. So since the market came down, it should have definitely touched your stop loss, or if possible, maybe you moved your stop loss just below a bit. But guys, once you see this ranging, you should be expecting a reversal, and then you just go off the market right there. Then maybe when you see, you wait for the signal again, and especially as you have seen this red moving average crossing above the chart, it's a sign that you should at least get off the market. So I mean, you should be able to at least make something very nice. This is how the strategy just is. It's quite simple, but you need to understand it before you start using it. You need to just grab it by practicing it. Then you see, and just risk what you can lose, what you can afford to lose, so that you won't get your emotions involved. You can just see, okay, fine, you'll be able to hold the trades well. But when you risk something bigger than what you can risk, guy, truly speaking, it's gonna affect your psychology, and then you want to close the trade before time, or you might not even want to close it at all if it's going against you. So that's it. Thank you for watching this. I hope this actually explains something very good to you, especially for the pips management, so that you can know how much lot size you're gonna use to take a trade, considering your risk management plan. If it's 2%, 3% that you are risking on each trade. So thank you for watching. Make sure you follow our channel right here. Click on the subscribe button, and then we are trading synthetic indices. Like I always say, use the link at the description below to create an account.